December, that's up 65. Oliver Slopes with Blue Line Futures. I kind of teed up the grain stocks report. Is that on the radar?
That is on the radar, as well as a few other things, including end of the month, end of the quarter positioning from funds and some volatility in the outside markets with Powell speaking later today, VP debate tomorrow, and a jobs report on Friday. So this is a big week all in all. And talking about that quarterly stocks report over the last 10 years, that's been pretty much a coin flip as far as market reaction goes for corn and soybeans. We've seen 5 positive closes and 5 lower closes for corn and beans in the last 10 years. So I think what we're going to be looking at is how the market responds to the data. Seasonally, corn can carve out a little bit of a harvest low between now and the first week of October. So we're going to see if that plays out true this year or not. The resistance levels for December corn to get out above 425 to 426.5. That's the top end of the range going back to July. On the downside, 408.5 is a pivot point. Break and close back below there, and we could be sub $4 again. So again, following today's report and turning the calendar over into October, I think the technicals are going to be a big thing to keep a close eye on as the focus shifts from domestic data here in the United States down to what's going on with planting and crop progress in South America.
We mentioned this earlier, 14-month low on the U.S. dollar index on Friday. We have all that news last week from China and pumping more money in. And then we get an export sales report overnight for soybeans. Could that be kind of a market mover, if you will?
No, I think it has been. I mean, we've seen such a big move higher in soybeans over the last couple of weeks, and I know that there have been some weather concerns down in Brazil with regards to hot, dry weather, slowing down planting, but I think more of the run-up in soybeans has been on the back of that Chinese stimulus, as you had mentioned, as they're just throwing everything at their markets, and I think that certainly played a role. Looking at Brazilian planting, they're 2% planted, and that's only 3% behind last year's pace, so it's still pretty early in the year, and it's still a relatively dry time of year for them as well. What we're going to be looking at is to see if they get that much needed moisture in the back half of October, which they typically do. So seasonal weather tendencies going to be key there. Flash sales, as you had mentioned, good to see starting the week, especially with China on holiday, 116,000 metric tons. If we can keep those numbers coming in consistently, and I'd like to see bigger numbers in that, then yeah, that could offer some support to the market longer term.
Okay, you said this report, somewhat of a coin toss, if you will, for how the market will respond. But what about the livestock markets? When we start looking at them, is there some friendly news out there? We'll find out with Oliver. Market Day Report continues in a moment. 6% higher. Oliver Slopes with Blue Line Futures. And we talked about the reports earlier. You said it's a coin toss, but as we move into October, could it be a friendly month for any of our proteins?
Yeah, seasonally, October is pretty friendly for the live cattle market, and I don't know if we're going to see that play out or not this year. I'm kind of expecting it to. We've seen the market have a nice recovery through the month of September following just an ugly August, which isn't good to see, but we need to get out above some big technical levels and need to see kind of the dust settle in some of the outside markets. As mentioned in the grain segment, there's a lot of news this week which could impact those outside markets and then impact the money flow in the livestock trade. Now, on the feeder cattle side of things, we're not necessarily as optimistic. Potentially there's more room to the upside, but if corn can mark and carve out a harvest low, potentially that adds a headwind to feeder. So happily friendly live cattle, a little bit of a toss-up in the feeder cattle, and then lean hogs. You'd mentioned a big run higher here recently. We got to 75, 76 for that December contract, which is really where we started to roll over back in June. So previous support is now resistance, and with the run higher that we've seen over the last couple months, I wouldn't be surprised to see the market continue to catch its breath here and maybe consolidate as we turn the calendar over into October.
So, Oliver, is it safe to say there's somewhat of a brick wall when it comes to the hog market?
Yeah, that 75 to 76 level is the first week of June. That's really when the selling accelerated it, and it was just a one-way ticket lower. We've had a nice recovery from those lows. We're looking for a little bit more of a pullback here in the December contract. I think 70 to 71 is probably a fair value point. That was the lows from this month's trade as well as the 100-day moving average. So I think we're coming into a little bit more of an equilibrium in terms of price for the December contract. We're going to continue to obviously keep a close eye on the fundamental backdrop as we continue to inch closer towards the end of the year, past the third quarter.
Vice President, Blue Line Futures, it's Oliver Slope. Oliver, thanks for your time this morning. Again,